All right, let's talk about the stock market. Specifically, let's dig into the role of information. Who has it, who doesn't, and does having it really create an unfair advantage? We're going to find out where the real edge is.
So here's the big question, right? Is the stock market a fair game? I mean, you hear these crazy stories about fortunes being made practically overnight, and it's so easy to wonder if we're all playing by the same set of rules. Is it really a level playing field, or is the deck stacked against the little guy from the very beginning?
I mean, just look at the contrast. On one hand, you've got the retail investor. Maybe they're scrolling through Reddit, talking about Starbucks or Southern Company, doing their own research, placing their trades. And on the other, you've got these institutional behemoths, Citadel, Goldman Sachs. We're talking about firms trading billions of dollars using strategies so complex, it would make your head spin. It's like two different worlds.
So when we talk about an unfair advantage, the first thing that probably pops into your head is insider trading. But what if I told you that some of the most powerful insider information isn't secret at all? In fact, it's hiding in plain sight. Okay, so first things first, let's get the definition straight. Illegal insider trading, the kind that gets you in big trouble, is pretty simple. It's when someone uses confidential, non-public information to make a trade. Like a CEO who finds out their company's about to be bought, so they snap up a ton of stock right before the news goes public and the price skyrockets. Yeah, that's a big no-no.
But here's the kicker. What if that same CEO still makes a big trade, but by law they have to turn around and tell the entire world about it, almost immediately? Well, that changes the game completely.
And that's exactly how legal insider trading works. When a corporate insider, we're talking CEOs, directors, major shareholders, buys or sells stock in their own company, they have to file a document called a Form 4. And get this, they have to file it with the SEC within just 2 business days. Poof, that trade is now a public record. It's a secret that's not a secret anymore.
And look, this isn't some theory. This is real, happening every day. You can literally go online and see the CEO of Alamo Group buying shares of his own company, while execs at Airbnb and Alphabet are selling. Think about that. This isn't some hot tip whispered in a dark alley. It's a public signal, showing you exactly what the people who know these companies best are doing with their own cash.
Okay, so tracking individual executives is one thing, but what about the biggest fish in the sea? I'm talking about the super investors, the financial whales who move markets with a single trade. Well, you can follow them too.
That's right. It's not just the C-suite, folks. The biggest, most influential investment firms on the planet are also required to disclose many of their trades. So now you can get a peek into the playbook of legendary investors and Wall Street powerhouses.
And this right here is a perfect example. We're looking at Berkshire Hathaway, that's Warren Buffett's company, selling off more than $4 million worth of stock in DaVita. When arguably the most successful investment firm in history makes a move like that, it sends a massive signal to the market. And again, this is public information, but wow, is it valuable.
So we can track insiders, we can track the super investors, but honestly, we're just scratching the surface. The rabbit hole goes so much deeper. The amount of high-quality, potentially market-moving data that is totally public and totally free is, well, it's staggering.
Just look at this number for a second. Over 364,000. That is how many individual datasets are available for free on Data.gov, the U.S. government's open data site. This isn't just random trivia. It's an absolute goldmine of financial, economic, and social data. And it's not just the U.S. government. You've got the World Bank, which publishes mountains of global development data. The Treasury Department, tracking the flow of international investments. The whole mission behind these projects is to put this information out there to help the public make better decisions. The data's there, just waiting for someone to look.
Okay, so there is a ton of information out there. Insider trades, super investor moves, government data galore. But if everyone can see it, where's the advantage? Well, that's the real trick, isn't it? Because having access to the data is one thing. Knowing what to do with it, that's everything. Because let's be honest, raw data is just noise. It's a bunch of numbers and facts. The real edge, the actual information advantage, comes from being able to sift through all that noise, find the patterns, and turn it into something useful, into actual insight.
And people do this for totally different reasons. On one side, you have an institutional investor who might use a pro-level platform like Verity to crunch all that insider data and hunt for their next big investment. On the other side, you could have an investigative journalist using a free tool like LittleSys to map out networks of corporate power. Same data, totally different goals, totally different insights.
And hey, don't just take it from me.
Here's a quote from a chief investment officer who says that using these kinds of specialized tools is one of his favorite ways to screen for new ideas. This is how the pros do it, not with secret handshakes, but with superior analysis of information that's available to everyone.
Which brings us all the way back to where we started. With all this public data and these powerful tools for analysis, is the market rigged? Is it a fair game?
Well, the answer isn't a simple yes or no. It's not really rigged in the way you might think, with some secret club passing around illegal tips. It's more like a really, really complex and high-stakes game of information.
In this game, the advantage doesn't go to the person with the secret. It goes to the person who knows where to find all this public information, who knows how to read the signals from the insiders and the big money players, and most importantly, who has the skill and the tools to connect all of those dots into one clear picture. That is the real advantage.
But here's the thing. Just when we think we're starting to figure this game out, the rules are being completely rewritten by a powerful and very new player.
As artificial intelligence gets smarter and faster, huge firms like JP Morgan are already using it to analyze this entire universe of data practically instantly. So when a machine can connect every single dot, read every filing, and spot every pattern in a fraction of a second, who has the information advantage then? That's the question we're all going to have to face very, very soon.